Have you checked your latest CPP statement lately? Because starting right now in 2026, your monthly Canada pension plan payment could be up to $1,507.65 if you're at age 65, and that's just the maximum for new retirees. But for millions of existing seniors across Canada, payments are also going up by about 2% this year due to cost of living adjustments. If you're relying on CPP, OAS, or GIS to make ends meet, these changes could mean anywhere from an extra $20 to over $100 more in your pocket every month. Stick around because in this video from CPP News and Finance Updates, I'm breaking down every key detail on the 2026 CPP payment changes, new rules in play, the real increases seniors are seeing, how the ongoing CPP enhancement affects you, payment dates, eligibility tips, and what you need to do right now to maximize your benefits. If you're a senior in Canada or planning retirement soon, this could be one of the most important updates you hear all year. Hit that like button if you're ready for the full scoop, subscribe, and turn on notifications so you never miss a pension or finance update. And let's dive in. First, let's talk about the biggest headline for 2026. The maximum monthly CPP retirement pension at age 65 has jumped to $1,507.65 for anyone starting their benefits in January 2026 or later. That's up from $1,233 in 2025, which works out to roughly a 5.2% increase in the maximum amount. This isn't just inflation. It's partly because of the CPP enhancement program that's been rolling out since 2019. The enhancement is designed to make CPP stronger for future generations, but it also means higher maximums are becoming available now as more contribution years include the boosted rates. For those already receiving CPP, you don't get the full new maximum automatically, but you do get an annual cost of living adjustment, or COLA, based on the Consumer Price Index. For 2026, that COLA is around 2% overall for existing CPP benefits. That might sound modest compared to some past years with higher inflation, but it's still meaningful. For example, if your current CPP payment is $800 a month, a 2% increase adds about $60 more each month, or nearly $200 extra over the year. If you're closer to the average CPP payment, which sits around $800 to $900 for most retirees, that extra amount helps offset rising grocery, utility, and housing costs. Now, why is the COLA only 2% this year, while the maximum jumped more? The maximum reflects the enhanced contribution base and higher earnings caps that have been building up. The yearly maximum pensionable earnings, or YMPE, for 2026 is $74,600, up from $71,300 in 2025. This means workers earning above that threshold contribute more, which funds higher future benefits. There's also the additional CPP 2 tier for earnings between the base YMPE and a second threshold, around $85,000 or so in recent years, which adds even more to the pot for enhanced benefits. But let's be clear, no massive new structural rule changes hit exactly in February 2026. Most of these updates take effect in January each year, with payments reflecting the new rates starting then. February payments are usually the second CPP deposit of the year, so if you receive direct deposit on the 28th, or whenever your scheduled date falls, you'll see the adjusted amount there. Some seniors might have thought February brought a special change, but it's more about the quarterly OAS adjustments and the flow-through of January's CPP updates. Speaking of OAS, old age security is another pillar for Canadian seniors, and it also saw adjustments in 2026. The maximum monthly OAS payment for those aged 65 to 74 is now $742.31 if your income qualifies you for the full amount. For those 75 and older, there's an automatic 10% boost on top of the base, so that pushes the maximum higher, around $816 or so, depending on exact figures. OAS got a 0.3% increase for the January to March 2026 quarter, which annualizes to about 2% over the previous year, similar to CPP's COLA. This is indexed quarterly to inflation, so smaller bumps like 0.3% happen when inflation cools. Important note, OAS is income tested. If your net world income from the previous year exceeds certain thresholds, around $95,000 to $154,000 for the clawback range in 2026 for ages 65-74, you might see partial or full repayment through reduced payments or taxes. The clawback starts at lower incomes for higher earners, so check your notice of assessment and use the government's online calculators to estimate. Many low-income seniors also qualify for the Guaranteed Income Supplement, or GIS, which provides extra monthly support. GIS amounts are updated quarterly too, and in early 2026, maximum GIS for singles can reach over $1,000 depending on exact income and living situation. Combined with full OAS and average CPP, some seniors are pulling in $2,000 or more monthly from federal programs alone. If you're not already receiving GIS and think you might qualify, apply through Service Canada. It's needs-based and non-taxable. Let's break down how these changes actually hit your bank account in 2026. CPP payments go out monthly on set dates based on your birth month. For example, if you were born between the 1st and 10th, your payment usually lands around the 24th or 25th, 11th to 20th around the 28th, and 21st to 31st early the next month. In 2026, expect your January payment to reflect any COLA already, but confirm with your My Service Canada account. OAS and GIS typically pay on the same dates as CPP for most people, often the last business day before the end of the month or aligned schedules. One practical tip: log into your My Service Canada account today if you haven't recently. There, you can see your exact CPP payment history, estimate future amounts, check for overpayments or underpayments, and update personal info to avoid delays. If you're turning 65 in 2026, apply for CPP at least 6 months early. Benefits aren't automatic, and delaying application could mean missing retroactive payments up to 12 months. Another key area: the CPP post-retirement benefit. If you're working while receiving CPP, you can still contribute and earn additional credits that boost your pension over time. The enhancement makes this even more valuable, as new contributions go toward the higher replacement rate, up to 1/3 more in some cases compared to the old system. For survivors and disability benefits, 2026 figures also reflect the enhancement. The maximum CPP disability benefit is higher now, and survivor pensions can combine with your own retirement pension up to certain limits. If you've lost a spouse or common law partner, review your eligibility. Survivor amounts can add hundreds monthly. Taxes are another factor. CPP and OAS are taxable income, so the increases could push you into a higher bracket or affect credits like the age amount or pension income credit. Consider income splitting with a spouse if applicable, or using RRSP withdrawals strategically. For Quebec residents, remember QPP mirrors most CPP changes but has slight differences in max amounts and contributions. Check Revenue Quebec for your province-specific details. Looking ahead, the CPP remains rock solid. Recent actuarial reports confirm it's sustainable for at least 75 years thanks to prudent investments and the enhancement. No major cuts are on the horizon, which is reassuring for long-term retirees. To wrap this up, 2026 brings welcome but measured boosts to CPP, OAS, and related benefits. The new maximum CPP at $1,507.65 Mars shows the power of the enhancement, while the 2% COLA helps existing recipients keep pace with costs. Whether you're already collecting or approaching retirement, take these steps. Check your My Service Canada account. Review your income for OAS GIS eligibility. Apply early if needed, and plan around taxes. Thanks so much for watching this update on CPP News and Finance Updates. If this helped clarify the 2026 changes, drop a like, share it with a senior who needs to know, and subscribe for more breakdowns on pension increases, investment tips for retirees, tax strategies, and finance news tailored to Canadians over 55. Comment below. What's your biggest question about CPP or OAS this year? I'll reply to as many as I can. Until next time, stay informed, stay secure, and take control of your retirement. See you in the next video.